For silver, so far, this is a push up. Green, 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 red, red. Although these are two huge red impulse candles. So we have big impulse candles that are equal to your, I'm sorry, we have big retracement candles that are pretty much engulfing or equal to your impulse candles. That's a very risky trade. So you want to be careful with that. But we'll just analyze this anyway as we see it and just mark it and just watch how it plays. Keep our eye on these commodities. And so we would put our fib down. You see this candle is green and it wicked all the way down here, lower than the red candle. So that's where we would put our 100. And our 0 would be at the top of this fib here. Then we would go down to our 4 hour and wait for price actually closed above our, oh, we at 4 hour daily. Let me do, what is this right here? Highlight that area. Okay. So I can follow. So price looks like for this one, price came all the way down and touched the 100. That is why I say it's important to be careful with those huge daily retracement candles, because they can be it's not if it's showing huge momentum candles, you know, we want the retracement candles to be smaller, ideally smaller than the impulse candles, because it's just the correction, not an impulse. So when we start seeing those impulse candles, you know, watch out. And we saw price hit it right there and touched our 100. So price can touch the 100 and come back up. However, it would have took you out of the trade had you tried to enter there. Have you tried to enter this trade? How do you try to enter this trade after these huge impulse red? I'm sorry, after these huge retracement red candles. So now that's something that you want to watch out for, and not even play with that fire there, because it's just not a good setup. It's not the best setup, right? So if we look at gold, we can see price is just meandering right here on the daily. But let's take a look at a previous gold setup that we can note an ICI for. Let's see an ICI. But here's right here we have, I think I did this one. I think I went over this one already, but I can go over this one again here. We have ICI, we have impulse candles and 2 retracement candles that are smaller than this impulse candle here. So we can ideally look at this, we can ideally look at this and mark this up. So let's mark this up here. Let's see where we're gonna take our fib. Hang on, actually I'm gonna replay this a little bit. Okay. Now, after we see retracement, maybe the next day we want to wait to see if it's done retracing. So let's take another day. Okay. So it was done retracing. So it started to push up. We would see on a 4-hour. Oh shoot, I lost my place. I'm gonna go back and mark right here. Okay, so here, let's fib this on the daily. So we would fib the top and the bottom of these wicks on the retracement candles. So because it's a retracement candle that we're fibbing, the 100 is going to be on the bottom of this wick. Let me take that off. Trying to move this. I can see the wick now. The bottom of the green wick because it's a little bit lower. And the top of the red candle. So bottom of the green candle here, top of the red retracement candle. Then right here where price would have been on this day, which would have been a Tuesday, we fall down, price is coming, and we see price coming down. And right here, so this is our 100 where price came down on the daily. So we wait for price to come back up, close above the 61.8 right here. Then we set a buy limit for the negative 27 right here. Long position. So here's also something too for gold that I noticed. Sometimes gold may not tap exactly to 61.8. So you can put your buy limit right above the 61.8 to tap you in. Like say like right here. Because sometimes it'll do this. It'll wick right above the 61.8 and then continue to move forward. But other times it will come all the way down. But if you have it right on the 61.8, you wouldn't have been tapped in unless you're watching it. Then you can market execute for the tap in, because we already see that it closed above in a gray area, which is between the 61.8 and below the 32. So it closed right under the 50. That's perfect. If you're watching price or if you put in a buy limit, tap you in right above the 61.8. Boom, and tap you in. Let's watch price play. Meander, it fell down to the 38, fell down to the 50, 60, 61, 88. Oh, the price just meandered from there on. So probably would have got out of the trade by then. Or if you would have had your if you would have had your closed after price closed above the 38 and moved your stop loss to break even or above, you would have broke even on this trade. On this trade, you would have broke even unless you had your unless you took profit anywhere up here, then you would have just broke even for the rest of the trade, because this one came down. This one came down and meandered, and you would have probably just waited for the next setup. But let's see how this continue to play out. It's coming down. And this is Thursday, Friday. So Friday, ultimately, if you're waiting, you would have exited the trade, and it'll probably exited you right at the 38 on a Friday if you were waiting for maybe price to pull you at its highest point. So that was March. Yep, that was a March ICI. And it pulled up, you see, it pulled up all the way. It didn't touch our zero, but it pulled us up close in profit and meandered. Meander. So now we see that when price gives us this huge retracement candle, as we saw for USD Polish, or was that USD Polish that we were looking at? We noticed that that those are the ones that meander and can come down, and doesn't really give us exactly what we're looking for, because it's showing that price is having a hard time knowing what direction it wants to go in, because it's giving us a huge impulse candle right here. Right here we have a huge impulse candle, and it's like, well, we know that we want to see price come up here, but if we're looking at the chart and we see a retracement candle that is just such a huge candle, that's when we need to be careful, because our trade may not play out the way that we're looking for it to play out. It may start meandering and pushing towards our red, and which we don't want. That is a huge reason why it's good to back test and see how the smaller retracement candles play out, as opposed to like the large retracement candles, if that makes sense. So, because we want our retracement candles to be smaller. For instance, let's say, this is impulse, retracement impulse, similar like that. These retracement candles are smaller, not too much smaller, but they're smaller. Let's see. the daily impulse. Impulse correction. Impulse. Something like this. You have your huge impulse candles and then smaller retracement candles. That's like a better setup. A better setup for another impulse. So that would be like what you want to look for. A regular pair, AJ. Let's see what AJ is up to. AJ's buying. AJ's buying. Let's see. Impulse correction. See, now this impulse here has a red candle inside of it. So typically we would toss this out and wait for wait till we see impulse all green and then the retracement to be all red. But that one here would disqualify us for our best case scenario for that trade. But let's see. Impulse to the downside or the upside, either one. Oh, daily, yes, I am. Okay. Yeah, so say impulse. This is one candle. So we're gonna get our two candles. Oh, we got three candles here, but we got one candle there. One impulse. Here's the impulse. Here's kind of like here's one of the two small daily candles. So if we were to look at this one, this was, let's see, we saw price bullish here and we saw some retracements and some more bullish action with all green candles. Let's see. Let's see what this is, retracement. These two red candles would mark that, like that. 100. So that would be our retracement, waiting for a 4-hour candle to tap us in on the 4-hour. Where is my chart? Oh, shoot. Stop the replay. No, stop it. Where did my chart just go? Let's go back to the daily. I definitely just lost my chart. Where'd the chart go? The chart just disappeared on me like this. Okay, what the heck? Let me just go back. Okay, here we go. Whoops. Okay. So let's go zoom in here a little bit. Impulse and then correction, 2 smaller candles. Fib from the 100 to the 0. Now we wait for price to tap us in on the 4-hour. Why does my chart keep losing me when I go to the 4-hour? Okay, it's coming. I don't know what's wrong with AJ. Okay, here it is. Jesus. Okay. So here's our 100 down here. This starting to push up. Now we want to wait for price to push above, close above the 61.8. When we get first candle to close above 61.8 here, that's when we set a buy limit back at the 61.8. This next candle would not have tapped us in, but you would have been tapped in on the next candle after that. Been in drawdown all the way to the 78.6 almost. Wicked back up, back into profit. Close you above, closed above the 0. I'm sorry, not the 0. What is this? The 38. Closed above the 38. Once it closes above the 38, you can either move your stop loss. You can move your stop loss higher to the 61.8, right above or right below. And let's put this on here. Long position. Say 88 or the 100 down to the 127. So here, you'd have been in consolidation for a while, and price actually didn't hit your take profit until Monday. So here is, you would have been tapped in. You would have been tapped in Monday, April 11th, and then meandered for a whole week in and out in profit near the 38. Came all the way back down to the 61. If you move your stop loss to the 61, you're tapped out. Depending on where you put it, you put your stop loss. If you put your stop loss here, you've been tapped out right here or right here. And then if not, If you would have held, it would have just taken you to the take profit, but because this is a Monday, if you didn't hold your trade over the weekend, you take your profit like normal, then you would have just been here. Then we just had to wait for the next setup. But ultimately, this one did hit profit during this time, but it did take some time for this one. Took a week. 1, 2, yep. Took a week. This was Monday. And then by Tuesday. So if you would have, this is an example of like price. If you close on Friday, say this is going up higher due to your confluences. You could have gotten back in this trade, put your stop loss at the 1%. I can't even move this. Put your stop loss at 1%. And got back in if you saw price came down. If you're one of those traders where you like to re-enter for another entry after you close on Friday, maybe you could have done that right here on Sunday. Price tapped you in. Price would have tapped you back into the 61.8 or above the 61.8 right here. Like I said, these wicks sometimes can tap you in too, and you just can adjust. Like right here, you could have adjusted for it to tap you in at the top of this wick, or in between the 50 and the 60 golden zone area, and done it that way, and just adjust your risk to reward for a 1 to 3. You can do that too, or you can leave your stop loss down here, the 88 or the 100, and just risk 1% or 0.5% if you feel like, oh, it hasn't come down below the 61.8, so it hasn't come anywhere down here thus far, so it could still, that the next week, take you into the take profit, take you into TP. So when you start back testing, or if you do it on demo, you can always see how looking for a re-entry in between the 61.8 and the 50%, and just adjust your stop loss how you want it, for a 3-point or a 2-point. So you do a 3. You do a 3. Then like right here, would have been like right here for a 3. If you have an entry in the middle, and watch price, put like an alert. You can keep your alert at the 61.8 so that you know if price falls below that, that it could be risky. It could be risky to lose that 1%. But in this case, price continue, and it looks like this was a news candle that pushed it right into take profit, right into our TP. So that's if you're feeling good and you want to re-enter on a Sunday. You can re-enter after you exit, so you don't have to hold throughout the weekend. And one thing about the ICI is like a super test your patience. It does test your patience. Yeah. Because sometimes this might not hit until Friday, 2 p.m. And by then, you're like, man, I wish I would not have. Oh, did somebody say something here? I can't read the chat. Oh, okay. Yes, it is recording. It should be recording. Yes. Okay. Any questions for the basic, what you're looking for, your entries, like where you put your fib? Any questions on that one? We got 2 minutes left for this Zoom to take us out of the game again. Or does
Thank you.
No problem. Does everybody get the idea of the impulse and what, like how the retracement candles should be smaller for the best case scenario?
Yes.
Yeah. Okay, cool. Perfect, perfect, perfect. I'll post more of the I'll post we'll see what happens tonight with CAT JPY. Post the updated charts and see like how the retracement and look and see if we get some green candles that'll push up higher to our 61.8, and we'll keep on watch on that. You guys can also post if you see something. If you see something, say something. No, so we can check those charts and look at it and see if it's a good entry, see if it's at least two daily retracement candles. It can always give us another daily retracement candle. We just want to make sure it's at least two and put our fib on the latest retracement candles and take it from there. But we got this. Hopefully next week will be a better week overall and price will do what we want it to do in a time frame. And I'll see you all on the charts.
Okay, thank you.
Welcome. Peace.
Bye-bye.
Bye-bye.